Hello, everyone. This is your market update for Friday, February 6th, 2026. Today, we're going to get consumer sentiment for February expected at 55. Normally, we would have gotten non farm payrolls today, but because of the government shutdown, that's going to be delayed. Looks like next Wednesday we will get it when we expect 60,000 jobs for January. We'll see what kind of revisions we get to the prior month, which was 50,000. And then the unemployment rate is expected to come in at 4.4%. Over to this post here from Bob Coleman, CME margin hike alert on gold and silver. This is the third margin increase within the last 10 days. If we click on this, we see that silver currently has a minimum maintenance of 15%, and that's going to go up to 18%. And the margins on gold will jump from 8 to 9%. So I think it was just a couple weeks ago, silver was 9%. So it has doubled here over the last couple weeks. And I think that's causing a lot of the volatility that we've seen over the last few days. Over to this video here from Clive Thompson. He put this out a couple hours ago. It's titled COMEX Silver 21 Days Until 429 Million Ounces of Demand Meets 103 million ounces of supply. March crisis. So this is interesting. It's about a 23-minute video. I'll put a link to it in today's post. I'll try to summarize the best that I can here. Uh, Over here, he has in the top panel, he has the amount of contracts per month for 2024 and 2025 and what we've had so far in 2026. And down here, he translate the contracts, which each contract represents 5,000 ounces of silver. It translates that into ounces. So down here in 2024, we had a total 205 million ounces were delivered. That jumped up significantly in 2025 to 474 million ounces. I think that was about a 130% increase. And now, if we go to 2026, we saw a record, I believe, in January of 49 million ounces that stood for delivery, and that is a minor month. So you have minor months and major months for delivery. The major months are March, May, July, September, and December. So it's really shocking to see January, a minor month, where we had almost 50 million ounces delivered. Currently, February, we're standing at 18 million ounces, and we're only about a week into the month. If we go over to this next graph, this is COMEX eligible. This is available for delivery silver. Note here that in October, this was on October 24th of last year, there was roughly 167 million ounces in this available for delivery category. That has fallen to 103 million ounces as of February 4th. And he said that over the last 26 days, that has dwindled by about 20 million ounces, and he's estimating that's a little over 700,000 ounces per day are leaving the warehouse. And at this pace, by the time we get to the beginning of the March delivery date, which begins on February 27th, which is 3 weeks from today, he thinks if we keep this pace, this could be down to 80 or 85 million ounces. Now, if we go back to this graph here, last March in 2025, we saw an astonishing 80 million ounces delivered. So, if we see an equivalent 80 million ounces in 2026, that could exhaust almost all of the COMEX silver. But the real problem comes in here with this graph. Currently, this is open interest for March delivery. Currently, there are 429 million ounces that of open interest that could stand for delivery. Now, normally he says you might see 5% to 10% of open interest actually converted into deliveries, and in very stressed times, you might see 10 to 20%. But he pointed out that here in February, 98% of the open interest, 19 million ounces, has been elected to stand for delivery because there's 18 million ounces so far in February. That is shockingly high at 98% conversion rate into deliverable silver. So We'll see what happens here. He said at a minimum, if we see match last March, 80 million ounces, that could drain the vaults. But if we have a 25% delivery, that would be 107 million ounces. And if we saw a 50% of open interest converted into delivery, that would be roughly 215 million ounces. So basically, he's saying that if we go back to this chart here, sometime this year, there's a good chance. Could be March. It could be the next big delivery month in May. Could be July. But sometime this year, there is a pretty good chance COMEX could run out of deliverable silver, and that could be the trigger that spikes prices towards $200. Just speculative here, but something that is a real possibility. I think that could happen this year. Over to the charts. Gold currently trading at $4,904. Technically still holding the 50-day EMA. If we look back at the prior mid-cycle correction during 1979, I pointed out, that we had that initial breakdown, we had a rebound, and then just prices kind of stair-stepped their way lower. And that took about a month, and then the uptrend resumed, and we saw that final blow off top. So it's possible we see something like that now. We had the initial breakdown, a quick recovery, and then maybe we stair-step our way down towards the end of February, early March before the uptrend resumes. But really, as long as we stay above the 50-day EMA, I think the potential for more upside remains. And really, we'd have to see probably prices below 4,300 for me to begin to think that okay, this may not be playing out as expected. Over to silver, currently trading at $73.80. Dipped all the way down here to around $64. And now we're recovering. Again, like I said, I wanted to see prices maintain closes above $69 to $70. We'll see if we can hold that. I think these margin increases are really hurting silver. And it makes me wonder if there's some coordination between the CME and the COMEX because of the potential delivery crisis that they could be facing here in March. Maybe they're trying to help them out. Maybe they're not. I don't know. But if the COMEX starts to run out of silver available for delivery, I have no idea what could happen to the price of silver, but it could go much, much higher. Over to platinum, currently trading at $1,996, trying to hold on to that 2000 level. Had an intraday low of $1,806. So we'll see if we can hold this. More or less, I'd just like to see prices hold the October high here around, in this chart, it says around 1,760. Over to GDX, finished down 6.34% yesterday. Looks like we closed below the cycle trend line here. Normally, when you fall into a cycle low, prices will break the trend line and then find a bottom a few days later. So it could be another week or so before we get a bottom. But I'd like to see prices hold that October high around 84.50. As long as we do that, I think we could see one more rally here into the second quarter. Over to Bitcoin, this is futures. I want to point out the similarities we had here during the 2022 breakdown to what we currently see. Prices broke the trend line, gapped through there, and then they just kind of continued to bleed lower. If we overlay the prior breakdown to what we have now, it looks like we could see we had this spike here that happened overnight, and it looks like we could bounce, recover for a little bit, and then maybe turn back lower into March and maybe make the next low towards the end of March, early April before we see another recovery. But ultimately, I think we're going to continue to chop our way down to maybe that 40,000 level. This is saying maybe by August, but ultimately, I'm not really expecting a low until October. So maybe we see a low, and then that maybe that low is retested later in the year. But still looking for 40,000 here in Bitcoin. So that's it for now. Have yourself a wonderful weekend, and we'll talk to you later.